have an excellent conversation coming up on global economy and trade, and we are going to be talking about navigating disruption. Disruption is something that is becoming a constant. We have Jonathan Ashworth joining us. Jonathan joined ACCA following with roles such as China economist at Fathom Consulting and global and UK economist at Morgan Stanley. He has also worked as an economist in the productivity and structural reform team. Jonathan has been cited in the Wall Street Journal, the Financial Times, and The Economist magazine. He has appeared on the BBC, Sky News, and CNBC. He's authored a book, Quantitative Easing, the Great Central Bank Experiment, and his academic work has been cited by major global institutions. Honored to have you here, Jonathan. Sajjeed is kind of part of Nutshell now, always present at our events. So he's going to be moderating this conversation with his ESG and sustainability expertise.
I think from a previous session, if we pick up, there are a couple of key messages, and one of a message was very clear, is get out of the way. So for the public sector, that's a one message, how they can play their role by not getting involved in the area where the private sector is supposed to and can lead. So let go is one of a key challenge. There was another interesting conversation picked up, is the institutions and the strengths of the institution. And I think it's not only the debate in Pakistan right now, it's a global debate. Whether we talk about US, we talk about Europe, whether the institutions have the strength and the people have got that trust there, which Samad raised very well, that the overall trust is the one which drives the society, economies, and the businesses. And if the people do not have that kind of trust, so that's been the economic results which we are going to talk at, either at a company level, at a national level, or at a global level, that would suffer as well. So, Jonathan, setting the scene there, the biggest conversation right now, and we look at the risk at a global side, as an economist, how you see the different drivers playing around and shaping the global economics and the trade cycle in the next 3 to 5 years?
I think it's evidently clear to everybody that we're seeing major changes in the trade policy of the world's largest economy, the United States, and a country that's been a key driver of the opening up of the global trading system since the end of World War II. Average tariff rates in the United States are at around 18% at the present time, which is the highest rate since the 1930s. So these changes in the trade policy in the United States is likely to have big consequences for the global economy over coming years. And I think it's clear to see that economies like the United States and China will want to continue to reduce their dependencies on each other over coming years. And we may also see that with other large economies seeking to reduce their dependencies as well, such as the European Union. But looking beyond this, I think for most countries in the world, there's no other opportunity but to embrace global trade, because domestic demand is not big enough in most economies in the world. So I think we'll continue to see most other countries continuing to look outwards and continuing to embrace global trade. So the nature of global trade will change, but I don't think the global trading system is going to close itself off over coming years. And we're already seeing countries seek new trade partners at the present time. We're seeing that with the European Union.
Thank you, Jonathan. And I think there's one question keep coming back. And I think Humayun picked up as well in terms of how we are measuring the progress, how we really take it forward. So there's a very common question. When we look at the global economy and we look at the GDP as one of a key measure of progress and prosperity, it might be relevant in the past. Is it relevant today, and is it going to be relevant in the future, particularly the way it's being calculated today to reflect the country progress?
Well, I think GDP growth is a good indicator of increasing prosperity in a country, but I think we need to look beyond purely headline GDP growth. I think We need to look at GDP per capita. That's showing how well each individual is doing in a country as a whole. And obviously beneath that as well, we need to look at the distribution of income. You look in a number of countries over recent decades, not least the United States and the United Kingdom. In the United States, you've had pretty fast GDP growth over the last 30, 40 years, but you've had big increases in inequality. So yes, GDP is helpful, but we need to certainly look beneath that as well.
I think that brings me to the other side, and let's focus on the economy, and we will come to the trade disruptors later as well. So if you look at the economic shifts which we have seen in the recent, let's say in the last decade, and what we are expecting in the next 5-10 years, it's a concentration of wealth, and you also alluded towards that inequalities of the income and the response and the behavior which we are seeing among the society. And we have to be mindful that there's a 5.5 billion people who are millennial, Gen Z, and Alpha going forward, and they are the key workforce. And their behaviors are very, very different. And the way wealth concentration happening right now among a very few, which is driving the national output as well. So how you see that inequality, the concentration of the wealth and GDP, which is even when we calculate the per capita, 5 companies who are generating the maximum output and export, when divided by the total population, that does not reflect the right realities underlying. And that economic model which we are seeing here, how we can, number one, leverage it, and how we can avoid the pitfall of that the society and the overall as a nation, we should not get carried away with the wealth accumulation in the hands of few and creating inequality of the income.
Yeah, I think just to touch on a few points, yes, some economies have grown quickly, but wealth inequality has increased quite significantly. But the quality of the growth in some of those economies has deteriorated because ultimately higher wealth individuals don't have the same propensity to consume as lower income individuals. So increasing the distribution of income and reducing inequality is often good for the long-term economic growth prospects of different countries. And I think you alluded to the concentration of some large companies, and you may have been referring to, say, the United States, where you've got the large technology companies very much driving stock market gains this year. And I think obviously artificial intelligence is the key trend over coming years, what we need to watch. Productivity growth has been very weak in a number of economies around the world over recent decades. This is at a time of aging populations in countries as well, and high government debt levels. So AI is a potential get-out-of-free jail card for governments, which could potentially lift economic performance. But government policy is going to be really important in this. I think historically, many changes in technology have often only benefited a minority of the population, whereas some changes in technology have benefited the majority. So I think it's going to be really important in the future that policymakers make the changes so that advances with AI benefit the majority of the population going forward. And important within that regard is making sure that countries invest in the infrastructure to benefit from digital advances in AI, and ensuring that the workforce has got the appropriate skills as well. And in that world, AI can be a complement to workers, boosting their productivity and their wealth, rather than just being a substitute for workers. Within that world, you get a big increase in inequality.
I think let's pick up on the trust side, which was discussed earlier as well. Where we are today, and you have run recently the economic survey as well, economic condition survey, so you have got a feedback from the individuals as well, and you can really see how it's happening across the globe. Do you think people have got a confidence right now the way we are going is the right direction? What is the level of confidence? What are their recommendations? What are their fears? What is the insight from that particular report on which ACC and IMA has recently conducted on the economic condition survey?
Yeah, that's a great question. And just to provide a bit of context, ACCA and our partner IMA have been publishing a quarterly survey of accountants and finance professionals since around 2011, where we ask them about their confidence at the present time, what's happening at their firms in terms of new orders, capex, employment and costs, just to gauge what may be happening in the economy. Our latest survey continues to suggest that accountants globally are quite cautious at the present time. Confidence is at quite a low level globally by historical standards. And the global new orders index is actually at its lowest in the post-pandemic period. So overall, our survey is indicative of some moderation in global growth over coming quarters. But I think importantly, it's certainly not suggesting that there's going to be a material slowdown in global growth, just providing a little bit of confidence that the global economy should still remain reasonably resilient.
Thank you, Jonathan. And when we talk about resilience, when we say things are bad, in Pakistan, we see that opportunity, it can only be improved. There's no other way. It's going to go up if we have gone so down. So I think that's one of our opportunity where every small contribution from our side, whether it's a policy, output, technology, that will help to go up. So that's one of the key area which we look at. I'll bring a very controversial issue right now when we are talking about the new economic models which are evolving. We have seen the concentration of the certain currencies as a reserve currency and the payment system which were running that one. And then we have seen how that was used or misused or abused in a different situation to again, like for the protectionism or to implement something which may be viewed equally or fair with every nation when we talk about specifically the sanctions and everything. Now we are seeing another trend where the quantum computing, AI, data center, and we are seeing a fight to concentrate that processing power at one place, which apparently seems that's another kind of control. Few nations who can actually invest in such an infrastructure will be holding it back, and that if the entire new economy is digital and or dependent on that infrastructure, that economy will be highly vulnerable to the very few. And we have seen that kind of mindset in US, Europe, and other part of the world, where one person, not the institution, but one person can make a policy and that can make the entire global economy shattered, literally, right? So how you see that digital economy as an opportunity, as a risk, where you place the different countries like Pakistan in it, what are the risk and opportunity for us, and how you see that control coming up or a concentration of that capacities and capability to the fewer countries?
Yeah, I think clearly you've got countries like the United States and China, which are way out ahead in terms of the AI race, and the US technology companies are very, very dominant. You know, and that's even a big concern for a large economy like the European Union. You know, they're very much reliant on US technology companies for much of their technology infrastructure, and there's also a risk that they could become reliant on them for the payment system. So that power risk is certainly there. But I think going forward, for most countries around the world, they may not be leading the AI race, but they've still got great opportunities as adopters of the technology, to improve the productivity of their firms and businesses as a whole. But there's also a risk there as well, because if your adoption is much slower than many other countries, your companies could increasingly get left behind. So big opportunities, but big risks.
So I think that's where we are seeing a certain recognition of regulations and the policy, specifically from a payment side, where the central bankers keep coming back and trying to make sure the financial transactions should not be highly dependent on the third party or outside or infrastructure or abroad. I'll just pick up another thing, and then we will open it up for questions and from the audience. So if we categorize the overall economic structure and if we look at the last 500,000 years, so we have seen a certain cycle of the economy and the global side of it. And if I generalize it, so it starts with the education where the people really get to know about what's happening. There's a competitiveness. That knowledge is used to create the products which are competitive. Then it leads to the second level for innovation and technology to get into the volume. Then it comes to the economic output like you mentioned, and then that economic output and the quality and quantity of the output reflect that GDP. Then we move towards the share of global trade, which is, we are talking about the supply chain. And interestingly, military strength is a component there to protect these assets which are being shared and to protect that country. And then the financial center strength, like the capital market to raise money like we have seen in the past. And the last stage is the reserve currency. So if we put it all these 8 different elements together, so that's reflect that at what stage we are in. And at the same time, to really see where we are in terms of Pakistan, and I'll bring that question back to the audience as well. So when we are talking about the combination of all these key variables as a key component or proponent for economic prosperity, what area you feel can disrupt the most? It's the education or it's the technology and innovation in that?
I'd say both. I think technology adoption is going to be really important, so you don't get left behind as a country. But I think one of your previous speakers mentioned it quite rightly, that the skills or education is often a slow-burning crisis. And that's not just in Pakistan, that's in many countries around the world, even in advanced economies. So I think ensuring the workforce and the youth of today have appropriate skills in the future is absolutely critical, so they can use these technologies and beyond technology, so they also have very strong critical thinking and things like that, so they can really thrive in a modern economy. So I think both technology and skills are equally important in the future.
It's true. Okay, thank you. So if we can have 1 or 2 questions, we have got 4 minutes, so we can take 2 questions from there. Meanwhile, anyone else, if you can raise hands so we can make sure you get the mic.
I have a small question regarding, by 2030, 70% of the CPAs and CFAs in USA alone would be retiring. So there's going to be a huge gap of accounting professionals around the world. So you as an ACCA guy, how are you actually trying to address it? Because this is going to be a problem. You all know that. AI, yeah, I mean, I have a startup of AI, and I know we are working on the same kind of problem. But again, there is a lot of issues that's going to be there, because it's going to be a shortage of human resource, qualified human resource for accounting professionals. So how are you seeing it with respect to your job at ACCA?
Assuming, just checking I understand the question, you're saying there's going to be a shortage of supply of work. Well, I think obviously, the accountancy industry needs to ensure we're bringing through new talent in the future to try and offset any shortages in the future, increasing the recruitment pools from different parts of the world. And obviously, importantly, also embracing technology and AI to complement the work of accountants and increase their efficiency so they can raise their outputs as well. And it can, in certain areas, make them much more efficient at producing various outputs. And so I think that's going to be the way forward in the future.
Thank you. Any other question from the audience? Okay, meanwhile, Jonathan, while we are looking at the question, if anybody raise hand, please give them the mic. So one question coming back to that, I think that's a very interesting area, which we are talking about, the human versus technology and how it's going to shape global economy, and specifically the trade side, if we look at. So the trade itself, based on a recent geopolitical incidents which we have seen, and we have seen the EU and Brexit there, and then the skill which is no more available to UK for that matter. And similarly, with the immigration policy, where the access to talent and skill is going to be issue, and at the same time, the geopolitical issues are creating a challenge in terms of the trade route, that how the the products will be moving from one part to other. So how you see the overall supply chain and the trade routes shaping up in the future with all that restrictions and the protectionism, at the same time they need access at a best price for those products from the other countries?
Well, I think you're absolutely right. You know, we've got this increased geo-fragmentation, and in certain areas it's going to increase in the future. But I think obviously from a business perspective, absolutely crucial to ensure you've got diversification of your supply chains. That's going to be absolutely crucial in the future, so you're not impacted in a massive way if there's global trade disruptions. So I think that's absolutely key. And also in terms of your end markets, ensuring you've got appropriate diversification in those as well. So if one of your partners was to embrace protectionism, all your eggs are not in one basket. You don't want to be in a situation like a country like Canada, you know, when 3/4 of your exports go to one country.
Right.
So I think the real watchword on global trade in the future is diversification.
Now, thank you, Jonathan, and thank you for your time and being here. So we really appreciate your presence. So just on the closing side, I think what we have learned and throughout the day or so far what we were discussing is what's happening and how we can really predict. And again, I go back to the very fundamental and the basic thing. We are not in a situation to predict, but we are in a situation to create. So if we really want to make sure that the future look like, we should take the charge and start creating it. And while we are creating it, the one thing which we have learned over the period, the risk management in the economy right now is very important, that how we do that. We have seen those geopolitical scenarios, and the one-person policy can really disrupt the entire nation in terms of the economic development. Supply chain routes, we have seen the disruptions, and the supply chain is not only the movement of the product, but also the sharing of that talent which exists at a different part of the world. Luckily, technology can help a lot, but definitely cultural integration still require people to work together at one place, and the productivity comes in a very, very different way. And Jonathan, I think rightly picked up the pillars which are going to drive and disrupt is education and the technology and innovation put together. Having a skill to use the technology and using a technology to develop the skill. I think that's the cycle which we should start looking at. And anything which we are predicting right now, unless until we are making an effort to create that kind of future, believe me, next year the predictions will be very, very different. So it's all about agreeing and executing small things which can be aggregated as a big impact going forward. So guys, thank you very much for such a wonderful audience, and we will be around at a networking session so we can have more questions. Thank you.
Thank you so much. Thank you. Interesting.
Thanks. An extremely interesting conversation. And here's my question to both of you. Aren't we kind of within a conflict now, because we are talking about disruption, yet the need for a long-term vision simultaneously?
I think the vision is still something which brings the hope and sense of direction. And to get there is not one way. So we can have a very, very disruptive route, interesting, adventurous one, and we can have a very, very stable route as well. So we have to make those choices, and both are the right choices. Where we are as Pakistan, we can't go slow and the very stable route. We have to figure out what are the 2-3 key disruptions which can bring us closer to that vision or put us on the path. So yeah, there is a conflict, but that's the beauty of life. We have to navigate that contradictions and the conflict, and that's where the disruption and innovation comes into play.
So we are on our feet, huh? And we have to stay that way.
We are in a very, very good shape.
And realigning the course.
Oh yeah, definitely.
Yeah?
And execution. It's all about not talking but getting to the execution. Whatever the small role one can do, we have to take that step and do that role.
Thank you so much.
We have an obligation to do so as well.
This was brilliant. Thank you so much. If I may request our very honorable SE team to please come and join us on stage. And Sir Sohail, I will make a special request to you to give away the mementos to our very esteemed panelists. Claps, my ladies and gentlemen. We have lunch on the other end now. If the books can be brought on stage, yes, please. So our traditional memento of these Pakistan books are going out. First to Jonathan Ashworth, Global Chief Economist, ACCA. And then to our very own Sajjeed Aslam. Thank you, Sajjeed. Please stay for a group photo with me also. And if I could request Rabia to please come join us on stage for the group photo.